that, I'm going to turn it over to Mark. I'm going to let him begin and ask that you welcome Mark Connor.
Thank you, Nate, and thank you, Trudy. We have survived the entire week together. When we were in the car for so many miles, there was never any discussion about what radio station to play because we were always talking during that time, if you can believe that. So there were many different kinds of things that we talked about, not too much of them theological, although we had a little bit of that back and forth. But one of the other things that we talked about is there is so much that has been going on in terms of changes in society with respect to our benefit programs, not just within the United Methodist Church, but throughout the country. And in terms of going to General Conference last year in 2012, one of the things that became very apparent for our denomination is that some of the promises that have been made over the years, while they were very important and very dear to us, there was some question about their sustainability if they didn't change going forward. So there was a great deal of debate. In fact, the Clergy Retirement Security Program, every provision of it was basically put on the table for discussion to say, do we really want to keep what we adopted back in 2004, or whether we wanted to go to the type of program that we had had for the 25 years with the ministerial pension plan. The only thing I sort of knew for sure as I was watching the deliberations of General Conference was that the pension program was going to have some type of matching program. Regardless of whether we stayed with some version of the Clergy Retirement Security Program, or even if we had gone back to a plan like the ministerial pension plan, there was definitely going to be a match. And so we do have one. It's one of the things that you need to hear this afternoon that we're going to talk about. It's one of the more critical things that you have action that you need to do between now and January 1st of next year. Some of the other things we're going to cover are partly to set context and background. It's important to hear them as well because things are never final. And there's always a lot of debate that goes on both within our church and also within our country. The first part we're going to get to are the retirement provisions. These were not changed by General Conference, but it helps set the context for how pension is paid sometimes differently to people who retire early versus those people who retire with full benefits. Frequently at some of our seminars, you don't get to hear very much about the Comprehensive Protection Plan except numbers. So I'm going to talk a little bit about how the Comprehensive Protection Plan works for its death and disability program, and then we will move into the pension provisions. Right after that, in your PowerPoint presentations, you'll eventually see towards the end that there are a whole lot of slides that deal with investments. We decided on this road trip not to deal with those. It's not that people I'm sure you have some curiosity about them, and our church has done a very good job with both the investing and with social responsible investing concerns. But you have the website available to you, and you even have some e-learning, some electronic learning that you can do through a program that gets into our computers at our general agency, something called the Benefit Access System. So not only is investment information out there, but there's many other reasons to go out to this Benefit Access System, and that's where I'm going to end up. I'll talk a little bit about our portal, this Benefit Access, because it's where some of the services were added even as recently as January of this year that you'll be able to take advantage of and that you need to take advantage of because of what General Conference changed. So with that, I'll get started. Please get out your books of discipline and find paragraph 358. I don't see very many people turning in their book of discipline. You probably don't have your saddlebags with you either as circuit riders, otherwise I would have said this was a requirement. You must have your book of discipline with you. But paragraph 358 is where the retirement provisions are found. The two that I want to highlight are, and it's sort of goofy that it's called the normal retirement provision. Social Security tries to use a different term, which I think is more useful to us in our denomination. It's the retirement paragraph that deals with full benefits. So Social Security talks about full retirement age. We actually have a provision that says, and it's still age 65, You get to retire with full pension benefits if you turn 65 on or before July 1st. And then there's an or, and the or is or the attainment of 40 years of service. Now that 40 years of service are basically appointment years. They will never count things like leave of absence. But for conference membership, it's basically any appointment, even things like appointed to attend school. If somebody has served as a local pastor, the only years that count towards when you can retire are full-time local pastor years. So student local pastor, part-time local pastor years, they don't count towards the 40. Very often local pastors retire by age, not by attaining 40 years of service. So we're going to see some examples of what that means, to retire on or before July 1st with 65 years of age or 40 years of service. Early retirement was not changed recently by General Conference, but it's been age 62 for a very long time, but the number of years of service that's required has changed quite a bit. It has moved from 37 years all the way down to 35 and now to 30 years of service. So if we do have people who start ministry in their 20s and we start to count up how many years of service they have, it's possible for pastors to retire in their 50s. You'll hear later about how big the reduction is for that, so it's not a very common done item. But 30 years of service or age 62 is the earliest that you can retire and start to collect benefits. There's another paragraph that we don't highlight here, but that's the 20-year retirement. And the reason why we don't highlight the 20-year retirement is that 20 years is not like what you would have as school teachers or people who work in civil service like firefighters or police people, because if you take the 20-year retirement, you don't get to start your benefits. And we're going to talk about the Comprehensive Protection Plan. You have no eligibility for the Comprehensive Protection Plan, and you have to wait until you turn age 62 if you retire in the 20-year rule in order to start your retirement pension. The church is not subject to the Age and Discrimination Act, so we have an exciting mandatory retirement. So if you attain age 72 and you're still under appointment, once that annual conference comes after you turn 72, you will be retired. It doesn't mean you won't still be in ministry, and it doesn't mean you won't continue perhaps to serve as a retired supply pastor, but what does happen is there's no more pension earned. You'll no longer be in the Clergy Retirement Security Program. If you earn salary, you still can make contributions and do some other things, but we do have mandatory retirement for people once they have turned age 72. Are there any questions about these retirement provisions? I will show you examples later about how the reduction works, but I just want to be very clear that we have both age or years of service. It's not age plus years of service, it's age or years of service. The question has to do with certain kinds of service beyond the local church. So if somebody has served as a military chaplain, my wife was a clinical pastoral educator, a CP supervisor. Anytime you serve any kind of ministry that the bishop appoints somebody to, even if you're not in the denomination's pension program, that year does count as a year of service. So maybe the other thing I should say about years of service is this has to do with when you can retire, but now how much you get. So the year counts for the when you're able to take retirement. The people who are appointed beyond the local church, unless they're a part of your cabinet or something for which the conference is responsible, it usually doesn't carry with it pension benefits, but the year does count. Any other questions? Okay, the first thing I'm going to talk about is the Comprehensive Protection Plan. You'll have a sheet that you could have picked up on the table called the 2013 Benefit Amounts from the Comprehensive Protection Plan. And before I do that, I want to get a show of hands of who I've got in the room. Who in this room is serving less than full-time, three-quarter, half, or quarter time? Would you raise your hands? It's not quite half, so I don't get to use any jokes about half-time groups of people working half-time, but there's a good number of you that are in the room. The first program I'm going to talk about, the Comprehensive Protection Plan, is basically available for those who serve full-time. So I'm going to talk a little bit about comparing our denomination's death and disability program, mostly making a comparison of the disability program to Social Security. So at least you'll get some understanding of Social Security that you might not have, even though this is not one of the benefit programs that you're in. But you could be someday in the future if your less than full-time appointment becomes full-time. And who in the room have quarter-time appointments specifically? I saw somebody waving at somebody, but I don't think that counts. All right, I don't think we have anybody in the room that's quarter-time. We're still going to cover the change for the pension program for quarter-time people, and Trudy's going to share with us a little bit about what those churches need to do, but I don't think we've got people in the room who are directly affected by this very specific category of quarter-time. We do have one? Okay, so you're a member of the conference as associate pastor with former local pastor status before that, but you're serving one quarter time? That's your appointment? I have an associate. Oh, at your church. Thank you. I got you. Thank you for listening for your associate. I'm sure I have other people who are in this room who are also listening for other people. I myself am a clergy spouse, and whenever we go out to some of the things within our denomination, I know who's listening to what. Sometimes my wife was a lot more carefully to the heresies that are given within our local church, and sometimes I'm listening for something other than that. So again, thank you for being here, even if you're not directly doing the church ministry. And perhaps you are doing the church ministry as a lay employee. So the Death and Disability Program has several features to it. One of the things that's contained in here is very rarely talked about, but let me first talk about a death benefit that most people don't know about. There is a lump sum where we will see what the provisions are, but besides getting a lump sum check, there's something called education benefits. And this has to do with, should a full-time clergy person die while they're still in active ministry, any children that are under age 25 would receive monthly educational benefits. They're equal to a certain amount until they turn age 18, basically as they go through until they complete high school. And then the amount of money that they can receive doubles between age 18 and attaining 4 years of after high school education. It can be a variety of things. It can be vocational training, college, but also we can have a pastor whose child at the time of unfortunate death, the child might be 20 or 21 years old. These benefits that are payable for post-high school education are limited to 4 years, and those 4 years have to be completed by age 25. So imagine a clergy person passing away with a child who's a junior or a senior in college. If they're a junior, those last 2 years would receive this tuition payment. It's roughly some $12,000 per year, roughly $1,000 per month. But even beyond those 2 years of finishing college, if the person decides to go into any post-college education, if 2 years were used up and 4 years were left, as long as they used it before they turned age 25, there'd be another 2 years available. Can be used for getting any type of master's program, or even to go to seminary. If you have any preacher's kids that are interested in doing that, sometimes I've seen people do that. So the educational benefits are very rarely talked about. The other type of benefit that's payable should a clergy person die very early in their career while they're full-time, there is a minimum surviving spouse benefit. So even if the pension that has been earned in just 1 or 2 years of ministry, maybe it's like a small $100 per month, the Comprehensive Protection Plan makes sure that if there's been a death, the spouse will receive at least, again, roughly that same $12,000 per year. That benefit used to disappear upon remarriage, but that's gone. So if we do have a surviving spouse and the clergy person did not have very many years in ministry when they passed away, there is this minimum surviving spouse benefit. And this information is explained on the sheets that you have in front of you. The primary benefits that we have deal with either a dollar amount or they deal with a percentage of a PEG, a number that we use quite a bit within our denomination's benefit programs, and it's called the DAC. 2013's DAC is listed here right below the heading. That's the $63,867. It's a number that's important for the comprehensive protection plan. It helps us to figure out some of the benefits. It's also a number that's important that deals with the clergy retirement security program. So you're going to hear the DAC come back many times by the time I sit down. We happen to know what next year's denominational average compensation is, and our crystal ball also can tell us what 2015's DAC is as well. How do we know it? Because it truly is a number that turns out to be 2 years old. So the 2013 denominational average is actually what got paid back in 2011, and there's no inflation added to it. For this year, we are using 2011 numbers. The 2014 DAC that you see here, that turns out to be the numbers that were paid for salary back in 2012. And we basically use the first 6 months of the year to figure out what the full-time salaries are to do our calculations. And we just published what the 2015 DAC will be. Now, the word planned compensation is very important because planned compensation is a number that applies to your full-time disability benefit. And for those of you who are serving less than full-time, it's also a very critical number because your planned compensation is what is used to figure out how much money is going to go into the pension program, the clergy retirement security program. So how do we come up with planned compensation? It's your salary, cash, and we add to that either the housing allowance if you don't live in a parsonage, or we add 25% if you are in a parsonage. It's not quite accurate to say that we take your box 1 of your W-2 because that's quite literally what your taxable cash salary is. But the church doesn't want to penalize you for having done some things on your worksheets. And both Nate and Trudy, as you have questions that may come up about getting ready for charge conferences this fall and filling out the worksheets, how we arrive at planned compensation. For now, I just want you to understand the definition, and we'll see if you have questions as we move forward. But the definition says, we take that box 1 of your W-2, and did you fill out with your church any programs for which you are reducing your salary for benefit programs? One of the ones that you might reduce your salary for is for flexible spending accounts to get reimbursed for medical payments through the Health Flex program. Also, you can sign up for what's called dependent care. These are cafeteria plans. It's not very well described by the slide, but Section 125 is basically what flexible spending accounts, medical reimbursement, and dependent care. That's when you decide that you're going to get reimbursed for some expenses for the next year, but you want to do it pre-tax. The other kind of thing that you can do to reduce your salary is to put money in the United Methodist Personal Investment Plan. And UMPIP is a 403B plan. So it's sometimes commonly called pre-tax contributions to a 403B. It doesn't show up in box 1 of your W-2, but your church treasurer would give you a W-2 that in box 14, where it's showing other information, there'd be a little code 7 saying that I'm contributing to a 403B plan, and you're doing that pre-tax. A lot more about that when we get to the pension programs. For now, I just want you to understand that when we are arriving at planned compensation, we'd modify your cash salary to include some things that you voluntarily took out of your cash salary for tax purposes. But since you're going to need to basically get recognition for this amount of money, we add them back in before we take the 25% for the parsonage or before we add the housing allowance to it. So some of you don't know what your planned compensation is. You can yourself find it out by going onto the website through the portal. It is something that can be calculated by using your worksheets that you'll be filling out at Charge Conference. And I'll let those questions go to Nate and Judy as they come up along the way. But this number that we're using, your plan compensation, is what is used for the disability program because we take 70% of your individual plan compensation and say that's what the disability program is. It's 70% of that. And then it's paid in two pieces. It's paid if you have a very serious and critical incapacity. Social Security would pay you disability benefits. And we add that together in order to figure out what 70% would be so that the comprehensive protection plan adds to it enough money to come up with 70%. This is what's called a coordinated benefit. If you take the church's comprehensive protection plan and add Social Security to it, this will replace 70% of your plan compensation. Now we need to talk about the definitions because Social Security and our denomination looks at what incapacity is quite differently. First of all, we only have a long-term disability program. It's not a short-term disability program. There can be sick leave, other kinds of leaves for the shorter time period, but long-term disability is defined as being an incapacity that your attending physician, the prognosis is that you will not be able to return to work for 6 months or longer. It's not that you couldn't miraculously return to work in 5 months. That sometimes happens. Sometimes people recover very quickly, and those benefits will never be taken away from you. But the definition is that it's a sickness or an illness that's presumed to last for 6 months or longer. The other thing about this is that the church uses a definition about the inability to work, and the inability to work is defined one way in your first 2 years of incapacity in terms of doing your own occupation, which is a very generous definition of incapacity. It means you can't be the preacher at the church. And there's many things that go with that. And simply losing something like your ability to preach, not from laryngitis, where hopefully you'll recover in less than 6 months, but if you had throat cancer and something happens where you're not able to come back and do the preaching, that already for the 2 years meets the definition of incapacity. After 2 years, then it has to deal with your ability to find work, gainful employment, based on your experience and your education level that you have. And again, this is a very generous definition. What does Social Security use? Social Security, first of all, for their long-term disability program, you're assumed to be out of work for at least a year or some type of incapacity that might result in death. But it has to be something that's expected to last a year or longer. And their definition of disability is the inability to get any gainful employment. So that's not our definition within the church, but you can imagine now that here we have plenty of people that do go on incapacity leave within our denomination who don't quite meet the definition of Social Security. And even for people who do have critical incapacities that will meet the Social Security definition, many of them need help to get through all the hoops and jump over the different definitions that they have. And our denomination helps people to go through that process in terms of filling out the forms, working with Social Security to get these things approved. So if somebody doesn't get approved for the Social Security disability, so they're never going to get a benefit from that, then we're not using that 70% amount. The minimum disability benefit is what this person would get. So there's no coordinating going on. It's 40% of the denominational average compensation, which is roughly some $25,000. Not enough to live on, but at least we have this strong of a long-term disability program for CPP. This did not change. This is something that's already in effect, but usually you don't have somebody in front of you that will go through some of the basics of the disability program. Do we have any questions about that before I tell you a little bit of the nuances? Because this is sort of a basic thing I want you to have and an understanding about how it works. Any questions about the long-term disability program, how much it is, and what the definition is? Don't be afraid to get yourself on television, even if they're going to put it on the website. All right, here are the small things that changed for General Conference. I'm going to go back to this theme and so is Nate when he comes up here. Sometimes we've got issues about how do we improve programs to make sure that they are sustainable into the future, but make sure that they're still giving a meaningful, appropriate benefit that we can live with into the future. And General Conference said there were 3 things that they wanted to change about the disability program. One had to do with the return to work incentives. Part of that was a carrot, something that helps people to get back to work. Part of it is also saying we need to have people returning to work who should be, who are not, and more about that in a moment. The mental and nervous benefit limitation, there are some people who, it's almost the nature of their illness, that they intentionally don't want to seek treatment. They actually don't want to get better, even though it's possible to get better. And so we sometimes have people who remain on disability who could indeed come off. So there's a limitation for 2 years. It doesn't mean that people can basically be cut off. People can also be on incapacity for way past 2 years with a very severe mental or nervous condition, but it requires basically a condition that cannot be recovered from through therapy or through some other types of remediation. The last thing has to do with how long disability will last. Normally disability lasts until retirement. So if you have somebody who becomes incapacitated younger than 60, once they reach that full retirement age 65, their disability benefit stops, and we start paying pension. But we also have people who become incapacitated in their 60s, and there was a change made at General Conference. So I'll go through these quickly. This is not anything you have to do anything about, but again, I want you to keep in the back of your mind that the reasons why these things are changed is to make sure that the Comprehensive Protection Plan is doing its job, but it's also sustainable without having to hit up all the churches for higher premiums going into the future because of the way it's working. So up until last year, at the end of December, if somebody was on incapacity and started to return to work, which they're always encouraged to do, sometimes the getting better is finding part-time work and finding out what the changes are of going back to the habits of having to do the things that you do in order to prepare for work and then get to work and do the work. We would have people who would come back for part-time work, enjoy the fact that they had gainful employment and collect wages, but all of a sudden what they got from their employer in money was taken away immediately from the Comprehensive Protection Plan. So somebody got $1 in wages and $1 taken away from the Comprehensive Protection Plan. And that just didn't seem fair, especially when you want to have an incentive for people trying to get back to work. So what General Conference said, well, instead of $1 for $1, we're not going to say you can earn anything you want to, because eventually when you do earn enough money, you're basically no longer incapacitated. But the rule is now that if you have $1 worth of wages, 50 cents, 2 for 1. So somebody earns $1.50 is taken away from the Comprehensive Protection Plan. Another thing that has happened is that we have many people in our denomination, over 800 people who are incapacitated, and almost none of them return to work. And what's sad about that is that their attending physicians actually have given them a prognosis and then even a diagnosis to say they can return to work, and they don't. Now, it's possible that the reason why people are not returning to work is because, and the doctor will make this clear throughout the process, if the work that they return to is in the local church, they have a high likelihood that they're not going to do anything other than just return back to incapacity, because that's part of the nature of how people, depending on the stresses and the other things that happen there, are not able to go back into local church work. But again, sometimes after 2 years, they could go off and do something else based on their training and background. And the church provides a lot of services to help these people in terms of new training, in terms of going into the job market and actually trying to find work. They're voluntary up until last year. Now, they're no longer voluntary. People can still refuse the help that's provided for the people who the doctor says can return to work. But if they turn down the help and don't try to actively engage of getting back to work, slowly but surely their incapacity benefits will start to be taken away. Obviously they will be counseled and find out why people are doing that. But the Comprehensive Protection Plan was not intended to just be a free benefit that people could live on. Social Security would have been a lot more hard-nosed about this. Within the church, I think it's been sometimes hard to have that tough love about making sure that people are returning to work who could return to work, and now the rules are going to make that very clear. The other thing that changed very quickly is how long somebody can stay on incapacity. This may be a little hard to see the numbers, but what the old rule is that if somebody got incapacitated in their 60s, they could stay on for 5 years. If somebody got incapacitated at age 63, they could stay on until 68. If they got incapacitated at age 66, they could stay on until 71. There's been virtually no other denomination and basically no insurance in the normal corporate world that does that. When people start to become eligible for retirement, usually they're pushed right to the door and said, hey, we've been giving you your disability benefits, now start to take your retirement benefits. So this modification that was made was not quite that stark. It does let people stay on incapacity, not for 5 years, but notice that the numbers change. If somebody becomes incapacitated at age 65, they can only stay on for 3 more years. If they get incapacitated at age 67, they can stay on for 2 more years. And it's, again, not that they're going to be left destitute without any income after that. Obviously, they're old enough to receive pension. So they didn't have to start the pension at age 65, which is what we have as our first eligible date, but it'll be, after a certain number of months, the requirement that they come off of disability and start their pension. So those were the changes that were made to try to improve the disability program. There was also a death benefit payable from the Comprehensive Protection Plan. A death benefit is no different than life insurance. It has the same characteristics. It's a tax-free benefit. You name beneficiaries, and it's in effect, at least during employment, and it will change at retirement. For active clergy who are full-time, the death benefit was not changed by General Conference. It remains exactly the way it was. It's $50,000 if this full-time clergy dies active, payable to whoever the beneficiary was named. If a spouse dies, these numbers are pegged to the denominational average compensation. So an active pastor's spouse dies, 20% of the denominational average compensation is $12,073 in this year. And we always use the DAC that's in effect in the year of death. So it'll go up a little bit next year if that's the year the spouse dies. What's the difference between the death of a spouse and the death of a surviving spouse? It's a little goofy, but it has to deal with, is the clergy person still living or not? So if the clergy person is not living at the time the spouse dies, that's called a surviving spouse benefit. And it's quite an enigma, including to me, why it is that they're different, but they are. It costs the same amount of money to bury people, but our denomination has done this ever since 1982. We've got the death of a spouse, and we have the death of a surviving spouse, which is 5% lower. If I have clergy couples in the room, it can be unbelievably hard to understand this. Just realize that each of you are treated as an individual. So if I have a clergy couple and there's the death of the clergy person, there's that $50,000 death benefit. But remember, they're a clergy couple, so that's also the death of a spouse. So the first 2 benefits would be paid when one member of a clergy couple dies. And when the second member of the clergy couple dies, then we get even more excited, because here we got the same death benefit of a clergy person, but now we have the death of a surviving spouse. So if you're not a clergy couple, pay no attention to that. But I seem to always have people in my audience who ask me about that. For death of children, these are really just burial benefits. And sometimes I will run into people who've got dependent adult children. The definition of who are children is contained in the footnotes at the bottom of the page that you've got for that. So no changes to this. What did change is who gets death benefits as a retiree. One thing to understand is that ever since 1982, when a clergy person retires and they've been in the Comprehensive Protection Plan, you as a conference have been paying the premium for this insurance, all premium payments stop at retirement. So no annual conference is billed for the death benefits for retirees. But we've had difficulty because we've had so many second career clergy in terms of trying to collect the money during the active years. Is there large enough of a pool of money in order to make sure that this benefit is sustainable off into the future? So here's the first thing that General Conference changed. The old rule for those who retired back in 2012, the rule was you had to be in the Comprehensive Protection Plan 5 of the last 10 years. And the reason why they say out of the last 10 years is sometimes people in their last years of ministry work part-time, or they may be appointed beyond the local church, and yet they spent some time in the Comprehensive Protection Plan. If somebody's had a long career, 25 years in the Comprehensive Protection Plan means you don't even have to meet that 5 out of 10 years. But starting with the class of retirees in this year, 2013, it was no longer good enough to have 5 out of 10 years. The number jumped up to 6 out of 10. And in order to make this sustainable, where the denomination wants to go is 12 out of the last 15. But they didn't want to hurt anybody who was already eligible. So the 12 out of the last 15 won't even go into effect until the year 2019. And as we move our way to 2019, the numbers will just simply go up one more year that you have as a requirement to be enrolled. One of the things I may have forgotten to say earlier is here when I'm talking about changes to the Comprehensive Protection Plan, these are in effect right now because General Conference met last year and the changes for the Comprehensive Protection Plan, all of them went into effect this year, or the rules that are trying to phase things in off into the future. They already started in 2013. When I get to the point where I'm going to talk about the pension program, there have been no pension program changes that are in effect yet. When I get to pension, those are not going to be effective until January 1st, 2014. Here's how the death benefits were changed by General Conference. If you look at the middle column and the far right-hand column of the handout that you have, you'll notice that people that retired back in 2012, the death of a retired clergy person was 30% of the DAC, and that was $19,160.10. General Conference rounded that number to the right-hand column up to $20,000. So this is one of the very few times that even though I'm dealing with sustainability, that the numbers were actually rounded up. Here it's coming. They're rounded up to a number, but they're going to stay at these particular numbers. So the people who do the costing for this, they're sort of excited not to have to worry about how much inflation is going to be with the DAC going into the future. And for future retirees, we know what the dollar amount is going to be. Obviously, we could have inflation, and over many, many years, this turns out to not be an appropriate benefit, and it can be changed. It'll have to be changed by a future General Conference. So we'll have to see again where we are for sustainability, but these numbers have been rounded up, and they will stay at this particular amount until General Conference changes it in the future. One last thing to tell you about the Comprehensive Protection Plan, and then I'll make the transition to pension. Although when I talk about beneficiary designations, I'm going to talk about beneficiary designations for all the benefits that you have within our denomination. First of all, it's important for you to hear that beneficiary designations control your death benefit and your pension benefits as to who they go to when you die. In retirement, sometimes your pension stops because it's a formula, but anytime there's an account, there's money, you never, ever, ever lose money that's in an account that you have at the General Board. That money would be payable to somebody. And what decides where it goes? Your beneficiary form, not your will. More about that in a moment. But remember, several years ago, our office kept sending you letters until you finally acknowledged that we said to you, here's what we have on our records for your beneficiary designation. Is that right? And you had to actively say back to us with correspondence saying, yep, that's who my beneficiaries are. And if you failed to send anything back, we contacted you again, and we contacted you again and sent you a certified letter. We did that because we had to get our database up to snuff to make sure that it was accurate. And during that waiting period, you could call up our office and try to figure out who your beneficiary was, and we wouldn't tell you. We would only do it by correspondence. Now that the computer is in fairly good shape for your beneficiary designations, you can actually look it up on the computer, and you can even change it on the computer for changing who your beneficiary is. But beneficiary forms have a primary beneficiary and a secondary beneficiary. And in my practical experience, it scares me a little bit that a lot of you had no difficulty with the primary beneficiary, but you got very creative with respect to your secondary or contingent beneficiary, or you got lazy. And then the secondary part, some of you said, I'll make that money payable to my estate. And that sounded like a very smart thing to do because your will might have some very good provisions in it as to who gets what, or you have some very exciting family situations where your children don't seem to all have the same capability or need for money, and so your wills have done all kinds of creative things with respect to who gets your money upon your death. When you do that for pension, and you say, I want my pension to be payable to my estate, your executor is going to say, oh my God, it's pension money. It's 100% taxable, and I'm going to have to write a whopper check out of the estate to the government because it's 100% taxable all at once. Pension, if it's ever left to an individual or a group of individuals, the individuals get to spread it out over their lifetime. You can't do that when you make monies payable via your will. So, word to the wise. Still may be what you wanted to do, or you may need to contact an attorney, because if you do have a complicated situation, maybe the attorney will create for you something called a beneficiary trust that knows money is going into a trust that's going to include pension money and can figure out how to spread it out with your heirs based on how old they are, dealing with ages. So you can always get a new form. Plus you can have 3 different designations. You can have one designation for the death benefit. And again, for the death benefit, it sort of doesn't matter because it's non-taxable. But you can also have a second beneficiary designation that deals with your personal account, the United Methodist Personal Investment Plan. And then you can have a third designation of beneficiary that deals with the church-provided pension when we're dealing with accounts. So when we talk about pension, you're going to see that the pre-1982 program and the CRISP program, some of those benefits don't involve accounts, so the beneficiary designation has nothing to do with them. The beneficiary designations for pension is always dealing with money that you've got in one of your accounts, usually the United Methodist Personal Investment Plan or the CRISP account. So do you have any questions about beneficiary of designations? Any questions about anything I've covered so far dealing with the Comprehensive Protection Plan? Because from here we're going to move into pension. I know it's after lunch, and you know what, it's always been after lunch everywhere I've been. So you're permitted to yawn or do whatever you need to, but if you have any questions, please don't hesitate to ask them or come up and ask during a break, or we'll spend some time at 4 o'clock before we leave to do that. So we're going to move into pension then. The primary changes that were made at General Conference were made to the Clergy Retirement Security Program, and I want you to hear this very, very loud and clear. All the rules that were already in place with respect to the Clergy Retirement Security Program, the Clergy Retirement Security Program began January 1st of 2007. We're still going to have the Clergy Retirement Security Program going forward, but all the rules that have been in effect remain in effect through the end of this year. And the new rules that go into effect January 1st of 2014, none of them are retroactive. None of them affect the pension that you've earned during any of these past 7 years. So any changes, again, to the Clergy Retirement Security Program are not retroactive. They take effect for what you will earn from 2014 going forward. What kind of program is the Clergy Retirement Security Program? It's not a duck because it doesn't sound like a duck or quack like a duck. It makes too many noises. It's both kinds of pension programs that it could be. It's a defined benefit and it's a defined contribution. A defined benefit is basically a formula or a benefit that doesn't involve money. It involves some way of calculating a lifetime benefit. It's very much like our pre-1982 program, but that's not the only thing that CRISP is. CRISP is also something that created an account, a brand new account that began January 1st of 2007. So these are both available, and they have both got changes taking place 2014. In your handouts, you've got a sheet that is a summary page, which I'm not going to go through because it has always been much easier for people to hear the examples rather than trying to see a very dense slide that has everything that changed. So I'm going to go through them piece by piece, and then I can go back and say, did you understand all the changes that are made to the Clergy Retirement Security Program? So there are changes to the formula, and there are changes to the accounts. I'm going to start with changes to the formula, and I'm going to give you the changes to the formula by giving you an example right off the bat. Here's my example. I have a pastor who's going to, this isn't it. That's the next slide. I'll get there in a moment. See this? Stay tuned. I have to go back. Remember I asked you who in the room was appointed less than full-time? This was the first big change that General Conference made. The very first thing that General Conference made effective 2014 is, and the first bullet is different than you have on your handout, but I wanted to make sure I said this because I forgot to say it 3 of the 4 times I was out in the field during this week. People who are appointed quarter-time starting January of next year will not be eligible for CRISP. And even though my person with the associate has disappeared, I still want all of you to hear what it is that's about to change for the quarter-time appointed people. They won't be in CRISP, but they're eligible for monies going into a pension program, and Missouri has a recommendation. So Trudy, would you share with them what is that and how they go about to take advantage of that?
The clergy support team made a recommendation. This was presented at annual conference and be in the clergy support team report, that those clergy who are quarter-time would receive a recommendation of 8% of their compensation into their UMPIP account, which is their personal investment account. So they'll no longer get the 12.22% that we've normally been billing to the churches, and the clergy support team wanted to make a recommendation to the local churches to make some sort of contribution to the clergy's pension. So they recommended 8% of compensation be contributed to their UMPIP account. And churches will, most churches probably have already received a form from the general board about how to go ahead and set that up with their church so that the church can make those contributions into the clergy person's account. So if there's questions about that.
Trudy, is that direct bill then?
Yes.
And what if the church doesn't make that choice?
Yes. When the church makes that contribution, that billing will come directly from the general board and be remitted back to the general board, whereas your invoice for health insurance and CRSP and CPP come from the conference. We bill you, you send that back to the conference, and we remit that to the general board on the church's behalf. This will be a direct from the general board to the local church and back. Did you have another part to that question? No.
To pay that, are we apportioning that?
No.
Okay, so that's something that gets worked out.
Right, so that's an agreement basically that the church and the pastor have gone into, that they want that to happen. If it doesn't happen, there's really no, it's just a recommendation. So, any other questions regarding that?